Hello, everybody, and welcome to the market outlook for Monday, June 29th. This is your market analysis for the week. So we're going to go through the currencies first, and then we're going to go through the futures markets. And then at 11 o'clock, we are going to go through the stocks on the dashboard. Okay, so this is we need to understand the disclaimer and read it that this presentation is for educational purposes only. Past performance does not equal future results. Please don't construe any information found here as advice or recommendation of any kind. And finally, now I know that most of you have taken the Wavy Tunnel PRO training, but to learn the strategy behind this analysis, if you haven't done the Wavy Tunnel PRO training yet, you go to wavytunnelpro.com. It's currently on demand. And when we have the live 5-day intensive program, you will be invited to that. Okay, so let's get started with the MT4 platform. And we'll start looking at the currencies. So oh, this is the NASDAQ. Let me put up the euro. Before we do that, actually, I want to look at the news for the week since this is Monday. So let's just do that. Very important that we look at the calendar. Just going to go to forexfactory.com. Here we go. And look at the calendar of events. And let's just look at the week's events. So I'm only going to highlight the red events for this week. For today, no red events. For when, actually today's Monday. For tomorrow, Tuesday, no red events. For Wednesday, we have ISM Manufacturing PMI at 10 o'clock. And Fed Chairman Moore speaks at 9 o'clock. That's on Wednesday. On Thursday, we have non-farm employment change, unemployment rate, average hourly earnings. That's on Thursday. And then on Friday is the July 4th holiday, the bank holiday. So it's another short week. And we have to keep that in mind, that it's going to be a short week. Okay, so that's the news for this week, or the events for this week. So let's get back to the markets. What do I have on the charts? There's a lot going on here. This is the euro. We will do a top-down approach. We have the Wavy Tunnel PRO here, and we also have the high-low. So the blue line is the previous high, and this gives us some support and resistance levels. The red line is the previous day's low. It's the previous day. So this blue vertical line, is the start of the day. Okay, so this is the start of the new day or the end of the Friday close. Okay, so everything over here, this is the previous day's high, the previous day's low, and then the opening rate for today. So this is what the market did in the euro. We're looking at the 15-minute chart, moving up into yesterday's high or Friday's high. Okay. Now these gray lines, this is from an indicator called supply and demand zones. So it basically just takes the swing low points, and draws it across. Okay, so up here we have another resistance area, which are the previous highs. Okay, now let's start on let me look at the daily chart. I think I need to just put the Wavy Tunnel on the daily chart, which let me just do that, and then we can just analyze on the daily and then the smaller time frames with everything else on it. Okay. Okay, so on this daily chart, we have all the trend lines as well. And we want to make sure that we understand the trend lines and what they mean and what happens if we make a break. All right, so this is the euro. And the first thing that jumps out at me on this daily chart is that we've moved up into the highs. We've moved up into the highs, and we have the purple semaphore up here where the wave is cleanly above the tunnel. And then we have some kind of consolidation. Why? Because price drops, the wave drops right into the tunnel. And what would happen is either we come down below the tunnel and we start to move up again, or we move down in this case and we have purple, yellow, yellow, purple. Now, corrections come in threes. So I use the semaphore colors to look at the corrections. This might have been a purple, gray, gray, purple. And as you know, the stacked colors go like this from purple royal semaphore. Below that is the noble semaphore. Below that is the yellow, and then the red, and then the blue. So purple, yellow, yellow, purple is a nice three-wave move. So this is also the higher time frame tunnel. So very interesting. The higher time frame tunnel is the weekly tunnel, and I can prove that to you by going to the weekly chart. And you can see that we have approached the weekly tunnel, which is nice, moving to the weekly tunnel. And we can see that on the daily chart. Okay, we can see that on the daily chart. So that's nice. And by the way, how many of you trade, if you trade currencies in this room, type a Y in the box. I want to see, because we will go to the futures markets after I just review these currencies. Okay, so now we're on the daily. Now we seem to have found a bottom down here. We're close to the weekly tunnel. So now the question is, and also all of the bungees are pointed up, which is nice. And even we have nice divergence in the awesome oscillator. You can see the divergence between this low and this low. And here we made a new low, and here we made a higher low. And we see the green histogram bar forming. So this tells me that maybe we have seen the low in the euro, maybe, and we want to look for buys. And then we will always come back to this daily because we want to see the histogram on the awesome oscillator coming back to the zero line. That would be equilibrium for us, moving back to the zero line. Now, if we are going to consolidate or move higher, then we will also see the bungees pointed up, and we will see perhaps the yellow bungee moving out of this lower reversal zone to the 40–50% level, perhaps. And then we would look for buys. But that's a long way off. Let's just focus on today. So now that we've mapped out the daily, let's go down to the smaller time frames. There is really nothing to look at with the trend lines here. Let's go to the 4-hour on this chart. Okay, let me just start with the daily first again and talk about this. So the first move on the daily chart is going to be a move to the filter. And a move to the filter is the equivalent of a move to the wave on the 4-hour chart. So let's see where we are. Yeah, a move to the wave on the 4-hour chart. And a move to the wave on the 4-hour chart is a fill the gap trade on the hourly chart. So let's move to the hourly and see that. So you can see how the multiple time frame analysis plays here. So again, starting at the daily, we're having a move to the filter, which is the equivalent of a move into the wave on the 4-hour and a move to the tunnel, fill the gap trade on the 1-hour. So on the 4-hour chart, if we are going to move higher, then that would be the equivalent of a fill the gap trade on the 4-hour. But let's talk about this trend line first. If I move the trading blotter over, that is a blue trend line. Let me move the trading blotter over, which you have in your website. I don't like the way this is. Okay. And the blue trend line, this is called the yellow blue trend line. The color is blue and the target is a yellow semaphore. You can see that here. The target is a yellow semaphore. So if the target is a yellow semaphore, let me just move this back. Okay. What have we gotten so far? We've gotten a red semaphore. So this is telling us that maybe we have more room to go. So let's put that in our back pocket now. We might have more room to go here, right? And on this chart, why don't we put up the, I'm just curious, I want to put up the supply and demand zones. We will get to the smaller time frames, by the way. Okay. Yeah. Okay, so this is just taking the swing points, So once we close above this high, and why don't we put a little line there so we can see it, then perhaps we will get that yellow semaphore. Perhaps we will get that yellow semaphore. Let's just put a horizontal line here. Okay, and now let's go down to the hourly chart. Whoops. I don't know if that's exactly where it is. Yeah. Okay, and let's look to see if we have any trend lines on the hourly chart. And we don't. We have the trend lines going the other way. Yeah, we have the trend lines going the other way. But if we are going to get the yellow semaphore on the 4-hour, then this hourly will likely do a fill the gap trade. Yeah, fill the gap trade. So this is the level that we're watching, the 1430 level. And then we have all of this area to play with. If we break above that level, we have all that area to play with. And this is currently, this is a breakout for sell, right? That's what it's looking like. But again, let's just go to the 4-hour. Yeah, I mean, there's no saying. We really do need to clear this area for us to start to move higher. If not, then we can fail and we can start to trade down. Let's just look at the 15-minute. And on the 15-minute, I want to go to the other screen, the other chart, because this maps out. Okay, but I don't have this level here. 114.29. So let me put that on this chart. 114.29. Okay, that's 114.30. All right, well, actually, it's telling us that this is the more accurate level. It's really this level up here, the previous day's high. That's really what the level should be. So I didn't get it quite right. Okay, it really should be that level on the other chart as well. So that price is oh, I can't read. Like 34, I think. Well, here I can look to see what the, let's see. Yeah, 30, 33, 4, 33, something like that. 33. All right, let me just. Now, given that this is the opening price all the way down here, below 114, 113.87, are we going to move up through this level today? Probably not. Probably not. And what I like to look at is the ATR, the average true range. So I'm going to do that to see what the average true range is on the euro, but I'm going to put that on the daily chart because the average true range will tell us there's just too much going on here. But let me put up the average true range. And let me see what the value is here. Okay, the average true range on the daily, this is the 14 days for the last 14 days on the daily chart. So I'm going to just see what that is. And to do that, I need to go like that. Okay. Is this right? Yeah, 62 pips. 62 pips is the 62 is the average true range. So now let's go to the 15-minute and see how far we've gone today from high to low. We've gone from one, I'm just estimating because I can't see exactly. I'm not going to be exact here. 113.80 to a high of 114.20. So this was the overnight low, 113.80, maybe a little bit lower than that, 75, I'm not sure, 78 to 114.20. So that's 40, a move of 40 pips. And the average true range is 60 pips. So we do have room to move up to this level here. We have room to move up to that level here and still be within the daily average true range. Now that is just the average true range. I'm not sure if that's one standard deviation. And yeah, I'm not sure how they well, they just take the average true range. So what I like to do is I like to look at the average true range from the opening level. And if we are, let's say, if the average true range is 60 pips and we've only moved 20 pips, then I'm quite confident that we're going to move more. Okay, now we've already moved 40 pips. So all I'm saying is that we have the potential to move another 20 pips. And that would take us into this level. If not, we could just stay here and then start to trade down. Either way, we always like to trade with, on corrections anyway. But I would be more bullish overall this week than bearish, looking for levels to buy. We can go down to the 5-minute chart. Yeah, so looking for levels to buy would mean a move down into the wave, for example. A move down into the wave. So looking for levels to buy. That would be a move down into the 114.10 area. Okay, and then looking for a level to buy for that retest of yesterday's high and potentially move higher, as we've discussed on the daily chart and the 4-hour chart. A move into the filter, a move into the wave on the 4-hour, a fill the gap on the 1-hour. Are there any questions from this analysis? Please unmute yourself and ask, and let me know. Give me feedback if you found it useful, if you think it's, full of BS. Let me hear from you. I'll just pause the recording to give you a chance to gather your thoughts. All right, Bob. So what are you looking at?
So you would let it drop back into, if it does, drop back into the wave, And then when it either slowed down or turned, especially if it went back and broke above the wave, it put your stop in one of a couple of different places. One under that green candle with the long, yeah, right there. The second one would be maybe under the red and blue, yeah, right there, just under the tunnel. And then your target would be, where you were saying earlier. Um,
Right.
then you could look to the left also to find support resistance areas for targets on the higher time frames. Uh, and then um, and then I would do a reward to risk ratio too, because I don't want to spend 100% risk and get 50% reward. S-
Right. Right.
So yeah, and then I would make the analysis on that.
Good. Yeah. So if you're buying in here and your stop is here, if just looking at that, I mean, two times that it brings us to the previous day's high.
Yeah, so that would be plenty. I mean, if you're
Yeah.
like beyond 100, at least beyond 100%, maybe 150 or up, 125 or up, something like that, then you take the trade. Otherwise, I wouldn't bother with the trade.
Right. Okay. And a few people said that it looks like there's room to move up. It makes sense. Okay, good. All right. So maybe we got the direction right on this and we have a plan, right? We have a plan. A few people said they agreed with the plan and Bob, you just articulated it very well. Okay, good. So now let's just look at another currency. What should we look at? Oh, let's see the dollar yen. Let's see the dollar yen. Okay, we're not going to spend too much time on this, but this is interesting because the dollar yen keeps on moving up. And I know Mark talks a lot about central bank intervention and are they going to come in or not? Not sure. I'm not following what they're doing, and we don't even know. But I mean, usually you can find news articles which say that they've been in. I don't know. I don't know. But anyway,
So,
the
so
yen is
the
weak.
euro yen tends to
Yeah,
go up and
yeah.
move to the right. Whereas I mean, excuse me, the USD yen, but if you go to the euro yen, it moves differently. It moves more aggressively.
Right. So that's exactly what I was going to say, that with the dollar yen moving up and with our semi-bullish view on the euro, the euro yen could be moving up. Or well, it hasn't been. It's been moving down, but now again we're having a move up now. Yeah, exactly. So this is the daily. So we have a very strong candle. Why? Because we saw the euro moving up today and the dollar yen is moving up or holding. Yeah, yeah. Let's put up the 4 hour. Yeah, this is a similar view to the euro. I would say that if we have some kind of a retracement, we'd be looking to buy the euro yen for a move up. Similar analysis to the euro. You agree, Bob?
Yes,
Yeah,
when you go down
yeah.
to the 5 minute, when you look at it the way you just did, and then you drop to the 5 minute, it's almost the same. It's not a lot of difference.
Okay. And also, let's just take note of this trend line, this red trend line. This is the noble red trend line. So we're looking for a noble. Okay. And we have a red. So this is telling us trade for the noble, trade the retrace for the noble. Okay, let's go to the 5 minute on the euro yen. Yeah, I mean, we're stretched. We're definitely stretched. And also, we have let me just go back to, we don't have any resistance areas showing on here. Okay, here we go. So look at this. We're already through the previous day's high. We're already through that. Let me put up the 15-minute. We could look at the average true range, just that's what we were looking at, the average true range. So we're already through this.
Yeah, the time to have picked this trade up on a 5 minute was probably around 9:20 this morning.
Yeah, right in
If you look
here.
at it. Yeah, well, if you'll go to the 5 minute, you'll see it. It backed
Yeah.
into the bottom of the wave and then moved sideways a little bit and then popped above the bottom of the wave, and that would have been your entry. So if you want to,
Yeah.
if you go back to around 9:20 in the in the morning, I mean, right? So it would be those two blue ones to your left, I think. If you look at the time there, it's probably around 9:20 Eastern Standard Time, something like that, right? Is it?
No, this is wrong. I have the wrong. Let's see. Okay.
Yeah, no, you got the right
It's
one.
now
Maybe I did the
showing
wrong
that
time.
it's 1830. So there is a
You take a 7 hour. So I have to take a 7 hour
7
difference. And if you're in
hour,
Canada, you're taking the same one. So
7 hour. Yeah, yeah.
yeah. So if you got
Okay.
16 minus 7 is 9. So it's is that what it's yeah, I can't see. It's
Yeah,
16.
yeah. This
Yeah.
is 4 o'clock.
Uh,
So
Yeah, so it's 9:20 in the morning Eastern Standard. So it
exactly.
backs into the wave there, right? I
This
mean, it
was the
backed in a little
entry.
bit earlier, but it didn't do anything. It didn't, well, I guess you could say it dropped up. Maybe it could go a little bit earlier than that. But in any case,
Yeah.
your stop would be below the wave anyway. If you took it
Yeah.
early, you might even move it back a little bit. But then,
This was the entry with this.
yeah, your
This is your
entry would be,
first
well, my
target.
entry would have been to the right a little bit when it popped above the, oh, yeah, right. Yeah. The first entry would have been when it popped above the wave. And then if you missed that, the second one, you had a chance on that one too, right? Because it just went
Yeah, we came right
sideways.
back in, but we
Yeah.
came right back in.
And that one, you do have a risk reward ratio that's good. Now, what would your targets have been? At that point, you probably have to go up to like the hour, or say the hour
Well, this
chart. You
would
go
have
to the
been the
left.
first target, the previous high.
Oh, okay. Yeah. I would have gone up to like the hour and then looked to the left and looked for support
Well,
resistance
this,
areas.
well,
And then
this
you
is the
probably
gray, the
find it.
resistance.
Yeah, right
This
there.
is
Yeah.
it.
Yeah. So then that would be your target. And then you would go for that with a stop. That would be that would have been, if you caught it, a good reward risk
Yeah.
ratio.
Yeah. No, excellent. Excellent. Yeah. Let's just go to the average true range. I'm just curious. Let's put up the daily. Okay. 90. 90. And we've already moved from 184.06 to 184.90. So we've moved the average true range. We've moved the 90, like from the low to the high. We've moved it.
And the other thing you
Doesn't
can,
mean that we can't go higher, but
right, on something like that, on a trade like that, when it starts to move, you could also move a break even trade. At least that's what I do. You start to get some good movement, and then you don't want to lose your money. So you move your break even up. You move your stop up to just above break even so you don't lose. Now, you don't always gain a lot either because sometimes it drops back. This time it didn't. This time it just kept going. So you've done really well. But sometimes it doesn't. Sometimes it comes back and hits you and then goes up.
right,
Oh.
right. Yeah, no, this was a very nice trade at the open. You're right. Beautiful. Yeah. Yeah, and talking about the profit targets, I mean, if you know the average true range also, I mean, you could set a profit target at the average true rate, like the maximum average true range, which would be right here, where we are now. Yesterday's high, and then if you think we're going to go even more in this area right here, But you're right, moving your stop to break even and riding it, those are all good money management and trade management strategies. Okay, so that's it. We have nothing more to talk about this. The trade is gone for now, right? I think we're going to move over to the futures now, unless there's anything else that you want to take a look at. We could look at NASDAQ on the trading forex trading platform. We could do that, and the S&P. Let me just. Yeah, this is the daily. I will go to the futures though. I'll go to the futures market, but this is the daily. So here we came down just to the tunnel. We moved back up again. We failed to make a new high. We came down to not the tunnel, the wave. We came down to the wave again. Yeah, this isn't giving us anything to move down to the tunnel yet. So right now we're trading in this range. You can see that we're trading in this range. This is the top side. This is the downside. And if we do break below this wave, then that's the next push down to the tunnel. But so far we're holding within this range. Yeah. Look at the average true range. We're really, really rocketing. Like there's a lot of volatility. So when you see this volatility, you can see it in the average true range. It means be careful, right? We're trading at the top side of the average true range. Be careful. If we were trading down here, you still have to be careful, but the moves wouldn't be as violent and as great. Okay, so we're trading up here right now. Moving down. Let's go down to the 5-minute. See, this move here, this was violent. Okay? Absolutely violent. So this was the opening. Was at 4:30. So this was the open right here. We traded up. Look at this move. Look at that move. Like, be careful. Now, one thing that I always say is that this is today's open. Okay, this is today's opening level. So today's opening level is Friday's close, right? It's really the Sunday night. Yeah. And yeah. So Asia took it up and then took it back down again. Euro took it up. Europe took it up. And very often in the New York market, we come down and we retest today's opening because New York, they don't want to see that the market has been taken too far away from where they closed it the day before, which would have been Friday, right? They don't like that. So look what they did. This was a beautiful buy, right? But you had to be prepared for that, okay? Right at today's open. And it even filled the gap from Friday's close to today's open, like the over the weekend trading. Now, I mean, there's no trading over the weekend. The over the weekend gap from the Friday close to the Sunday open, it even did that. Beautiful, beautiful. If you were prepared for a move down to this, I mean, maybe not so suddenly. This is where fear creeps in. If you were buying up here or buying down there, fear creeps in, right? Unless you are prepared for a move down. When I looked at this, now I've been in meetings the whole morning, so I did not trade today. I've got to, I'll be honest with you, but when I looked at this before the market opened, my first thought was, okay, we're too far away from today's open. We're gonna come down, maybe not to the open, but the initial move will be lower. Did I think that this would happen? Absolutely not. But when this happens, yeah, I don't want to say it's a gift, but it's kind of a gift. But you have to be prepared for it. Okay? And then look all the way back up again. Crazy, crazy, crazy. So this is very, very volatile. Let me put up the NinjaTrader charts and we'll have a look at the NinjaTrader charts. Okay. We'll start with the MNQ. I'm just going to open it up here to, to show you that you're seeing the exact same thing. See this? I mean, the data will be, pricing will be a little bit different, but this purple line is Friday's close, and underneath that is the opening level. And this is the red dotted line is today's low. Okay, so that's today's low. You can see that we came right there, but we came down into the opening price. So it's the same thing. All right. You might get different, yeah, it's different price levels. There is a difference in price, but the price action should be the same. So let's just take it from the top. I'm putting up the daily on the NinjaTrader. We just looked at that on the MT4 platform. It's the same. We came down into the wave. We came down into the wave again. We're holding. So until we take out the wave and these lows, until we take that out, we can't expect to move down to the tunnel. Can it happen? Absolutely. But we need confirmation, and our confirmation would be a breakdown below the wave for a fill the gap trade, but that's on the bigger time frame. Yeah. In the meantime, we're trading. I could almost draw a box around this area because that's going to be the range for the time being. Yeah, that's going to be the range for the time being. That's on the daily. So if we move down to the 4-hour, okay. Yeah, I know this is probably a lot on the charts to see, but this is we're in the blue box. I mean, it's a okay, this is very interesting. Let me just so do you see this candle? This is the 4-hour. I mean, we obviously know that this happened like at 10 o'clock after 10. Look at this. You see this tail? You can see how violent that move was all the way down to the opening level. All right, let's go down to the hourly. Okay. I think I want to take off this blue box because it's just let me take it off from the daily. Okay, and now let me go down to the hourly. Okay. Yeah, vicious, vicious, vicious. This green line here is wait a second, let me see. It's yesterday's high. So I have today's high and low are the dotted lines, and yesterday's high and low are the solid lines. Okay, that's what it is. And this solid yellow line is yesterday's open. So we are almost at yesterday's high. Better to be seen on the 15-minute, I guess. Let's just have, yeah. Okay, so let's see, what do we make of this? Well, what we make of this is probably at these higher, at these levels, the market will be sold. At these higher levels, probably the market will be faded. Okay, yesterday's high, trading this range, trading this range. That's what I would expect to happen for today on the NASDAQ for today. Okay. Because we've already traded a huge range. So yesterday's high, which is Friday's high, that's going to be a very key level. If we hold that level, then the market will fade it there. That's the 900 level, okay? And then trade the range. If we go to the ES, interesting, very interesting. The ES is trading stronger than the NQ. Let's go back and I'll show you the four different. Here, let me put up the RTY here. RTY. And let's just put up the dailies on all of them for a second. When you look at this on the daily charts, on the upper left, we have the S&P, upper right, we have the NASDAQ, lower left, we have the Dow, lower right, we have the Russell. What do you see by looking at this? Which two indices are stronger? Are the stronger indices? Do you want to take a gamble? You want to take a guess and type it in? Which are the two indices that look stronger to you based on the pattern that you're seeing? Type it in the box. Let me give you a clue. Is it the ES? Is it the ES and the NQ, or is it the YM and the RTY? Ah, good, you got it. MYM RTY. You got it. Yeah. Beautiful. Beautiful. Good. So everybody sees that, right? Yeah. So these indices, that's why we're seeing some divergence in the indices. These two, the YM, the RTI, are stronger. Why? Because we are in a correction in the S&P and the NASDAQ. We're in a correction in the top two indices, but not so in the YM and the RTY. So these in the currently, these two indices are more bullish. Now, if we go down just for the daily price action, let's move down to the hourly. We want to look at something else. Okay. Okay. I want to show you something else. Oh, interesting. I don't have the, okay. I don't have yesterday's, I don't have the same template on the lower two. Let me just see if I can put the template on. Load. Here, this one. Okay. There. I didn't have the yesterday's price action on this, and I didn't have it on this. Let me change the template on this. Okay. And I have to go down to the smaller time frame and then come back to the 60-minute. I want to show it on the 60-minute. Okay. Okay. If we just focus on the top two for now, the ES on the left, the NQ on the right, well, these are the MES and the MNQ on the left and the right. The MES is showing more strength. Why? Because it's above yesterday's high. It's above yesterday's high. Okay. The NQ, the MNQ is not above yesterday's high. I mean, they're pretty well following the same pattern, but the MES is a little bit stronger. You see that? Okay. And let's just look at the R3. Yeah. So the MES is also in between the R2 and the R3, and the MNQ is below the R2. It's below the R2. So the MES has traveled farther than the MNQ. I mean, it's just an observation. And if we go down to the YM and the RTY, I don't have the micro contract up for the RTY. This is the mini contract, by the way. So we are trading, if you're looking at these two markets, the YM is stronger than the RTY. Why? Because the RTY is selling off today. This is the 60-minute, and we're below yesterday's high, and the YM were above yesterday's high. So just some observations. So let's go to the 15-minute. Now we can go back to the 15-minute and look at the ES. I'm going to open this up, or the MES. Yeah. So for today, most likely we're very close to the R3. Most likely we are going to trade within this range. Most likely. We're very, very close to the R3. So I can even put the R3 there, but most likely we will stay there. So what that means is if we trade up and maybe we squeak out a slight new high, maybe not, the market will probably fade it up here. Does that make sense? Let me just move this over here. So that would be, let's look at the price. Yeah, around the 74.90 area, around the 74.90 area. Yeah. Yeah. It still looks bullish, so it's looking like we could test that area, but I'm not sure we're gonna, go. We might go a little bit higher, probably not too much higher. But right now it's still bullish. I mean, looking at the 15-minute, what do you see here? The yellow bungee is above 50%. And if we look at the smaller bungee, the weaker bungee strands, we're trading close to the upper reversal zone. We do want to see a stretch away if we're going to buy this again, a stretch away if we're going to buy this again. So we can look at the 5-minute for that. Yeah, like here we had a stretch away right over here. And we would want to see a stretch away if we're going to be buying this again for a move up to this level. That's what I'm seeing. Here we have a trend line break. Okay, that's the trend line. So that's the magenta trend line. Yeah, but it's, yeah, I mean, a magenta trend line break would look for a red semaphore. So that would be great. I mean, if we had a move down with the stretch away and the red semaphore, that would be a nice area to go long again. Yeah. For a move up to this level. We look at the YM. Let's have a look at the YM. Oh, it's 11:59 already. Oh, wow. Okay, I have to start the dashboard in 1 minute. Okay, we have our range in the YM. We're right in the middle. We're smack in the middle right now. Okay. Same principles apply. A move up into this area might, cause resistance, and a move down into this area will be supported. So that's really all I have to say for today. We have to move on to the dashboard now. So I just want to close this by saying thank you for your participation, and thank you for coming into the pre-market analysis for June 29th. Hopefully this will guide you in the week to come, and I'll be here next Monday. So thank you.